We are now recording. We're going to, okay. Now we're going to try something that is a little bit new. Whoa, look at me, look at my face going in and out. Okay. We're going to take a poll. So I'm going to ask you a couple of questions before we get into our discussion here. See if you're still awake. All right. So I've launched a poll. You should see a poll on your screen. We'll give it about a minute to answer or until everybody has voted. All right, everybody says has answered. So I've ended the poll and sharing the results. You see, if you haven't had an accounting class, you're in good company, okay? So it is by far the majority of you, this is your very first accounting class, all right? So don't worry that half the class has already got a whole bunch of understanding or done this before, all right? So I don't want you to think that. Let's see, we're gonna do a second question. What do you think of first when you hear the topic of accounting? So you got a few more choices this time. It might take a couple more seconds to actually think about it. All right, everybody has voted. So I'm going to end the poll and share the results. So by far and away, the biggest vote was either because it actually was math or because it was the first one on the list, one of the two, depending, okay? But we're going to try to counteract that a little bit because that is what a lot of people think. And second was income tax returns, which do have a relationship to accounting, but is a very narrow part of what accountants do and what we would think of in accounting. All right, so we're going to focus a little bit more on those communication and language of business ideas, all right, as we move forward here. So you should see my screen, right? What is accounting? Everybody see that? We're all good? Okay, okay. So here's what I would like you to think of when you think about accounting. By the time we're done, the next 6 or 7 weeks, I hope that you will think of accounting as the language of business. That it is just like German or French or Swahili, it is a language that we use to communicate. So as we go through and learn some principles, the key thing to keep asking ourselves is, what are we communicating? What are we trying to get across? If you're going to communicate, you need to have rules. There needs to be accepted ways of saying things or describing things or presenting things such that people can understand what you're saying. If there are no rules, if everybody says it differently, then nobody can understand one another. All right? I want you to think just how crazy it would be if there were no traffic rules in a big city. There were no stoplights, no stop signs, nobody directing which way to go. You could drive on whichever side of the road, okay? Any of that, how confusing that would be because there would be no rules. All right, so we have to have an acceptance. So some of what we will learn is some of the rules. We will not learn all of them by any stretch. This is just the first class, but we will learn some of the basic rules that help us communicate. Um, and I want you to also think about it as a language of business, in that if you really want to understand what's going on in business, you need to understand the language people are using, what they are talking about. If you were to go to, let's say, um, let's say Russia, and you wanted to get around by speaking English and understanding English, you'd probably be okay. You probably could use some pointing and other things, and there would be enough things in English that you would probably not starve to death or die in any way. But you would not understand what's going on around you very well. And it would be hard to see the nuances of what was happening in individual lives. But if you can actually understand, speak Russian, hear Russian, understand Russian, then you would be much more able to understand and communicate with everybody around you, including the locals, and maybe get to know what it's really like to live in Russia. Okay? That's what we want to be. We want to get better. We will not get perfect. We will not get fluent in 7 weeks, but we're going to get a lot better at being able to understand what people are talking about when they use accounting terms. Just a second, someone has joined us. Okay, accounting is a decision-making tool. Second principle idea. Okay, it's not just a language, it's also a way to make decisions. In accounting, we long time ago decided that the primary decision makers that we're worried about, we're trying to communicate to, are investors. These are people that are outside the business who are looking, okay, to invest in a company. They are either going to lend the company money as a loan, or they make investment where they would have ownership. Either way, they are looking to make an investment with the idea of making a return on their investment. They are trying to use the information in accounting to judge whether or not that company is worth investing in and whether it will make a reasonable return. So they're looking to manage the risk, because anytime you make an investment, you take some risk. And they're trying to manage that risk to a reasonable level such that they can make a reasonable return on their investment. In return, we mean more back than they put in. I mean, what good is it to do if you just get back what you put in? You want more than what you put in. That's the goal of a return. And that's what decision the investors are trying to make. They're trying to find the very best mix of investments to get that risk and return to kind of balance out. So I made this little chart, okay, to kind of show you kind of how this works in sort of like a circle, meaning we have business owners and managers, people who have their own business. It may be a huge business. It may be Nike. It may be Starbucks. It may be Harley Davidson. It may be a little pizza shop down the street. In any case, there are owners or managers of that business that are making business decisions every day. What to sell, what not to sell, who to hire, where to locate, okay? Whether they should have a lot of stuff sitting around for people to buy, or they'll just have little bit and order it in when people come in and say they want it. They're making all those business decisions. If they make the right business decisions, they will generally be successful, meaning that they'll be able to grow, they'll be able to have enough money to pay their bills, all that good stuff. If they make bad business decisions, they are likely not to be successful. So it all comes down to how good of decisions they make. We as accountants, or people in accounting, take their business decisions and morph them into accounting decisions. We take what they did to try to make the business better, and we translate it into accounting language of business, and then summarize it and communicate it to the investors or the lenders. Okay, and of course there's some give and take back and forth. They tell us what they want, we tell them what we're going to communicate. We communicate in the form of financial statements. We're going to learn a lot about that the rest of the 6 weeks we're together. Those financial statements, the primary way that we communicate these accounting decisions, this accounting language, this accounting information to these investors and lenders, who then are going to make investment decisions. They're going to decide to invest in Nike instead of Harley Davidson. They're going to decide to stop investing and do it a different way. That all of those are investment decisions. The business owners and managers who know that those decisions are going to be made may make different business decisions based on knowing what investment decisions are going to be made. So it's like a cycle. And if it's a good cycle, we're constantly making better decisions. The information, the accounting information, is helping the managers make better decisions, investors make better decisions, so that they invest in good companies that make them even better, which means that they're going to make even better business decisions and continue to improve, because they know that that investor is going to be interested in that improvement. So if it's, on the other hand, if it's bad information, it tends to go a downward cycle in that we make poorer decisions and worse decisions. So we are in the middle, you might say, as accountants, or accounting is in the middle of all of it, and we have to be able to trust the accounting information. Otherwise, we're not going to be able to make good decisions. Investors won't be able to make good decisions. Business owners won't be able to make good decisions. And when bad decisions are made, remember, it's not going to bring about success. We need the allocation of capital to those businesses which are efficient and who are doing a good job. And if you think a company is doing well, but it's really not, then you're going to make a bad investment decision, right? You're going to invest there when you shouldn't have, because they're not doing well. And that is because the accounting information wasn't communicated correctly. Somebody broke the rules, somebody was unethical, somebody made a mistake perhaps, but the information was not communicated properly, and therefore bad decisions were made. All right. All right, a little bit about risk. Here's something that everybody here has to deal with risk. There is a risk to everything. The only time there is no risk is if you are not alive. And all of you are alive, or at least somewhat moving around, okay? Your eyes are maybe moving a little bit, okay? So we all face risks every single day. A risk is a chance the outcome will be different than what we expect, good or bad. So risk itself is not good or bad. It is just that it's going to be different than what we expect. Most people say risk bad, okay? But it really is not. It's neutral. Risk is just that it will be different. It could be a risk that you'll win the lottery. That was unexpected. That was not what was. It's a fluctuation from what we expected. You have to have risk in order to have return. Remember, investors make investments with the idea of getting a return. If you want no risk, and the old adage was, okay, you take your money and you put it in your mattress, which is a really bad idea because it's really hard to sleep on a mattress that's lumpy because of the money you stuck in it, okay? So, but even if you stuck it in a savings account in a bank, that's very low risk, but it's also very low return. If you put it in your mattress, you get no return. And some people think, oh, that has no risk. That's not true. The risk is that the money you stuck in your mattress when you pull it out won't be able to buy as much. And therefore, you have actually lost over time. Because when you pull it out of your, just think about, well, it's hard to think about now because we don't get to go to movies, okay, and stuff like that. But movies are one of the things that you can guarantee the price is going up every year, right, at the movie theater. And so if you were to pull that money out of your mattress, you're going to be able to go to fewer movies than you did when you put it in the mattress because of inflation, because of movie prices going up. And so you actually had a risk. Your outcome was not what you expected. You expected to be able to go to so many movies, and we can't go to that many because you stuck your money in a mattress. So there is always risk if you want to get a return. And I'll just tell you, anybody tells you that they can guarantee, and I don't know if it's like you receive this, but if you get scam emails like me sometimes, they were going to tell you, invest your money in this, and it will guarantee 30% return on your investment. I can promise you that if they promise you a high return with no risk, it's a scam. It's a lie. If you don't learn anything else in accounting class, if you learn that one thing, that'll save you a lot of money in your life, okay? Because I don't know how many times people come to me after they made that investment that sounded too good to be true and said, oh, and I said, there's not much you can do about it now, but if they promise you that, it's not true. So regular investors who are not trying to scam people want to predict the future returns for their investment. So there are two ways that you make money by buying stock in a company. You can either get dividends, which is cash, part of the profits, or the stock price can go up over time. So you buy it at $8, you sell it for $10. That's a return, $2 that you got for making that investment, okay? So investors are trying to think, what can we invest in that's either going to pay us interest if we're a loan, or it's going to pay us dividends, or it's going to have the price go up. And we'll take either one, maybe all three even, but usually we kind of have to pick between the three. All right, we're going to try to get enough information to manage our risk. We'll never make risk, I said this before, never zero. No, there's no such thing as no risk. But the more and better information you have about your investment, the more likely you are to be able to manage that risk to an acceptable level. And one of the ways we do that is we look at what's happened with the company in the past. So you say, well, Netflix has been successful for the past 3 years in being able to stream these videos and charge people every month, and customers keep signing up and so forth, and they're generating all of this income. Therefore, we believe that next year they'll be able to do the same thing. It's not a perfect predictor of the future, but it's a pretty good predictor of the future to look at the past. And so we spend, some people would criticize accountants with looking too much at the past, but that's one of the ways we trust to make predictions for the future. So just a little idea of how this is what we might be talking about, a real life example. Nike Incorporated. This is the price chart for Nike over the past 6 months. This is a measure of what the price of the stock was each day for the last 6 months, okay, or week, in this weekly chart, okay, for each 6 months. You see it was up around $100. It dropped all the way down here to 60, okay, like a lot of companies did when the pandemic first started, and then has gradually come back up and hit around back up to 100. So how could you make money as an investor in Nike? Well, certainly if you would have bought here at $60 and sold here at just over $100, that would be a nice return on your money. You also could make money because this D stands for dividends. That's when Nike shares their profits with the shareholders. So that usually happens every quarter, depending on if the company has the cash and enough profits to be able to share with their shareholders. That's part of the reason. That's why you might say you buy a stock in a company is called a share. It's because think of it as them sharing the profits with those that own those shares. So definition for dividends: distributing profits earned by the business to the shareholders. And so as an investor, I'm thinking, well, is Nike going to have the cash available in the bank and the profits in the future to be able to continue to pay dividends and give me that return on my money? And will Nike keep growing? Will they sell more shoes, more stuff that will make the company more valuable and thus make my share of the company more valuable over the next year, 2 years, 10 years, whatever? So to manage that risk and predict the future, we look at the past financial information, and like every company like Nike that's sold on a stock exchange is required to communicate their accounting information according to the rules. Remember, we got to have rules to help guide how it's communicated in the form of financial statements and other explanatory information. We'll talk a little bit more about this organization, the Securities and Exchange Commission, in a later chapter. SEC is the one that requires Nike to provide that information to investors and to everybody for that matter. Any of us can find that information. I'm going to show you how. This is some examples. This is what Nike released to the public on June 25th, 2020. See the date? Okay. This is their fourth quarter and full year results, and they told us that their revenues were $6.3 billion, which was less during that quarter, that's 3 months, from the prior year. Why? Because of the pandemic. Okay. They had stores that were closed for 6 weeks, 8 weeks, depending on where they were located. Their digital sales, though, on the good side, were up 75%. So they made up some of that based on selling online. And China had an 8% increase. So they had a better year, better quarter in China. So this is what they put out there. This is not financial statement. This is what is referred to as non-financial or explanatory financial information. Kind of tries to explain what happened. This is from the annual report that is submitted every year. It has, and you see how long this report is, 96 pages at least. Okay, just in this part of the table of contents. And it's easy to find your way around by clicking on these tabs if you went to the real deal. This would be on Nike's website. This is how you find financials. You're going to have an opportunity to do this with Starbucks in your homework. All right, same idea. There'll be a table of contents, and everybody puts the financial statements in item 8. And this is one of the financial statements. And here we are, first day of accounting class, and we're already looking at real financial statements. This is exactly what Nike reported to investors for fiscal year ending May 31st, 2020. So their year ended on May 31st. They reported this in June or July. Notice that these numbers don't look very big, except that they are in millions. So that my friends, is $37 billion of stuff that Nike sold last year. Not too shabby, all right? But as you can see, and this is what we start to figure out, it's down from the year before. Now, the question we have as we see that is this a trend that's going to continue? Is this going to turn around? Okay, that sort of thing. And notice what's highlighted, net income, also down. So they made $4 billion in 2019 for shareholders. In 2020, they made $2.5 billion. Now that sounds still like it's still a lot of money, but just think about it. If your income was cut by 1/3, you'd be going, I'm not so sure that's exciting. That's literally what happened here. The income that Nike earned was cut by 1/3. All right, actually a little bit more than that, almost 40%. So that's the kind of information that's communicated in the financial statements. And here we are, and already looking at that, because I want you to jump in and throwing you right in the pool, and expect you to do a little dog paddle and see what you look at these financial statements. And you're also the homework. I'm gonna ask a couple of questions. The homework's gonna ask a couple questions about Starbucks information as well, as we get used to looking at it and thinking, what is this communicating to investors? All right. Now, you could blame this whole drop on the pandemic and decide it's a one-time thing and it's not going to be long-term. Or you can decide that this is a concern that is going to affect sales going forward, and that maybe would make us worried that Nike has become more risky and less of a good investment. All right. So, any questions about what we just looked at in terms of financial statements, how we found them, or what we can get from them? We're going to look at several of them over the course of the next 6 weeks and ask ourselves that question pretty much every week, at least. What is being communicated by these financial statements, right? So let's see. We're a couple minutes early, but I think we've covered everything that we needed to today. So anybody else? Everybody knows what homework they're working on between now and Thursday, right? We know where the reading is to get ready for that homework. We know the memo assignment we can get started on if we have time, okay? But that's not the priority, right? Because it's not due until later. And we all know how to get on here, and we'll come back on Thursday, right? Where we will go over homework, make sure we all got the right answers, and talk about some other financial statement communication, give some other examples. Other than that, thanks for joining in today. Again,
thank you, Professor.
Do in the Dropbox, right?
Nicole, I didn't hear the first part of your question.
The homework is due in the Dropbox. Is that what you said?
Yes, it is. So put it in the Dropbox by class time, before we have class at 12:30, so that it's turned in, and then we'll go over it. Then you can put your corrections, if you need to, in the Dropbox after class. Okay?
Thank you.
All right. Thank you very much. You have a great week and great day, and thumbs up, everybody. All right. Take care. Again, if you have questions in between, post them in the discussion board.
Bye.
See ya.
Have a good one.
We'll see ya.